It's my great pleasure to invite here Claudia van Munce, who is a venture advisor at NEA, director of the Bank of the West, PNB Paribas Group, and Best Buy Corporation. But what's most important, Claudia was the founder of IBM Venture Capital Group. Roy Glasberg, global lead, Google Accelerator and startup program, Google Launchpad. Ramneek Gupta, managing director and co-head of venture investing at Citi Ventures. Higgen, managing partner at BMW iVentures. And Ricardo Angel, managing director at GE Ventures. Welcome.
It's going to be tight.
All right, am I on?
You are.
Hi, everybody. I'm Claudia van Munce. I have a great pleasure to be here for the very first time. And of course, kudos to Anna. She got
Ricardo.
so many corporate venture leaders that we're having a hard time fitting everybody here.
That'll help.
All right.
What do we need?
So we're moving this table. Okay, sounds good.
All right.
Thank you.
Right in the middle. All right.
All right, we're all set. All right, good job. Okay, so
It was a sign.
get your mic.
Hey, wait.
So obviously, we just heard a great introduction. The framework, aside from, just remember the smart money part and forget the last part of that. But corporate venture is a very, very significant force if you're an entrepreneur. And we're so lucky today to have not just Ilya painting you from this overall macro view of a very fast-growing and relevant segment of our venture industry, but also have 4 leaders here, the real practitioner of corporate venture, talk about how they actually do it. I mean, one thing you should get out of it is there's so many models at play, and you as an entrepreneur, my advice to you, coming from the dumb money era when I started IBM Venture 15 years ago and retiring as a smart money, thank you very much, that there is so many ways to really navigate. There's so many models at play, and it's really best for an entrepreneur to really get a very, very broad repertoire of knowledge individually about the corporate venture. First of all, strategically aligned to what you're trying to do is number one. And then figure out from these leaders and others, if you have an opportunity to connect with them, how do they operationalize all that, right? We each got the mission, each got their different measurement, different programs that can help entrepreneur, and as you saw earlier, the decision-making process, but it's up to you, entrepreneur, to really be able to understand what is the best path through all that knowledge. So what I'm going to do is give each of the leaders on this panel an opportunity to introduce themselves, talk about really the unique thing about their mission within their large corporation. I really, as IBM corporate venture leader, we really saw ourselves as a way to source innovation. And we done it in a different way, and that was always a very critical factor of the growth of the company. So I'm going to start with Ramesh here to go by the order, and maybe take 3 minutes just initially to talk about what you're trying to do here and your organization.
Sure. Thank you, everyone. Glad to be here. My name is Ramneek Gupta. I co-lead the venture investing effort at Citigroup. Most of the team is based here in Palo Alto with also members in New York and London. And our charter is to help drive innovation at Citi, and we do so by spending a lot of time with our businesses and functions, trying to understand what their needs are, where their gaps are, what their roadmaps are, and at the same time spending a lot of time with the startup ecosystem and with the entrepreneurs to understand where the world is headed. And when we see an intersection between those two, we try and identify the best companies at those intersection points and then get them connected to Citi. So a win for us is Citi getting access to these companies early. At the same time, a win for us is our portfolio companies getting Citi as a big reference customer, oftentimes the first big reference customer of our scale and size. And when those two constituents of ours are happy, usually our investment in these companies does well. In terms of themes, we focus on, obviously, given who we are, who our mothership is, fintech, fin services. But in addition to that, we also spend a lot of time around IT, especially three main core areas within IT, which is big data, analytics, machine learning, AI. Wow.
Wow, that was exciting.
Maybe the introduction went too long, yeah.
I didn't buzz you, I promise.
Big data analytics is one area, cloud is the second, and info security, cybersecurity, that's in the IT space. And on the business-facing side, in addition to fintech, fin services, we spend a lot of time in digital commerce, payments, reg tech, the application of capabilities to the compliance and regulatory ecosystem, and digital media marketing and customer experience.
Thank you. Ricardo?
Claudia, thanks. Can you guys hear me okay? All right, so Ricardo Angel, I'm with GE Ventures. I've been doing this with GE for about 10 years now. We've been doing venture capital for the last 15 years, so that's an all-timer. Focus in energy. GE Ventures is one of the levers that we use for innovation. So we report to our vice chair of innovation and growth for GE. Her name is Beth Comstock. And so our main driver here is to make, number one, strong financial returns, being on the VC side. And then secondarily, almost just as important, is making sure that we make also a strong strategic returns. And we view that as a plus for both the startup company, as well as GE overall, as well as for investors like us, right? And so we have a pretty sizable group. We're based here in Menlo Park. We have offices in Chicago, Houston, Boston, Washington, D.C., and we also have a couple of people in Israel. And so we invest across 4 different areas: energy, broadly defined, and that's where I'm at. We also invest in healthcare, software, and advanced manufacturing. So we're pretty broad. Since we have been investing since 2007 just in energy, just to give you an idea, we have invested in about 65 companies just in energy. Of those 65, we have IPO 10. We have about 9 or 10 have been acquired, and about 10 or 11 have not done great. So we still have about 30 companies in energy. And if you think about all the companies in the 4 different segments that I mentioned, we have about 95 companies in our portfolio. Our target is to deploy about $200 million a year in companies that are innovative. It could be software, it could be hardware, innovative business models. It's pretty flexible. Similarly to what was just mentioned, when we make investments, we're looking to bring more than just capital to the table. We're looking to see how we can leverage the GE platform so that GE can become a first-time customer, a channel to market, and potentially, ultimately, also an acquirer. But so we can talk about that later on.
Okay, thank you, Ricardo. Roy?
Perfect. So my name is Roy. I've been running Google Launchpad program for the last 3 years. The best way to explain what we do is that we create a bridge between the startup ecosystems around the world and Google. I'm going to be the weirdest one from this group because I don't serve a specific segment or a specific initiative. We are just kind of moonshot thinkers of how can we bring the best value we can bring from Google to startup ecosystems around the world. One of the experiments we've had in the last 2 years is to build a program that would serve emerging startup ecosystems. The pilot started 2 years ago with 3 startups. Today we're in 4 continents, 17 startups, a portfolio of 110 companies. In 2 years we managed to get 3 exits, 1,000+% increase in revenue and user base. And basically the biggest value I think we bring is that whenever we bring Thailand, Philippines, Vietnam, Sao Paulo, all the regions in the world that we work in, we bring back a lot of knowledge through these entrepreneurs and mentors that we bring to the program. We also serve for the different Google initiatives to kind of help Google product people and different initiatives at Google to find and locate the right startups to work with. That can be in AI and machine learning, that can be in transportation, that can be in fintech. But at the end of the day, we measure our performance on how many entrepreneurs around the world we were able to bring to the program and help them on their metrics, to how many mentors have we trained so we secure the next generation of these startup ecosystems around the world, how many investors were we able to bring to the table and do kind of cross-pollination between Silicon Valley and emerging markets. And obviously the last, because we're Google, we also do a lot of government work on working with policymakers on how to enable local startup ecosystems.
Thank you, Roy.
My name is Higgen. I'm with BMW Ventures, and we are running the second iteration. We launched a new fund beginning of the year with a sole LP, which is BMW. It's about like 550 million euros, which we spend in mobility, like in autonomous driving, digital car, advanced manufacturing, Industry 4.0, but as well on like fintech, car sales platform, and those kind of things to innovate and in the value chain of BMW. We are organized as an autonomous unit. We can decide on our investments ourselves, and we speak to our sole LP like twice a year to like 4 board members and make sure that the next fundraising will be as smooth as the first one. And yeah, we take board seats, and so this differentiates us.
Will they give you
we talk about that.
Cool.
Thank you very much. Certainly one of the things from my experience that entrepreneurs are most interested is how do I approach a corporate venture? I have my company, of course, I think is the best thing since sliced bread. How do I approach a corporate venture and position myself for something that they will be willing to, invest some resource, at least help me navigate within the company. Large corporation, as you know, the navigation is the hardest part. There's so many different business units, there's so many different decision layers. So I would like to really focus on you and your interests and have our panelists talk about from their perspective, what is the best practice that they have seen of entrepreneur, young company in trying to engage with you at Citi, at all around the different business units that you represent as a corporate venture, the ways that the entrepreneur can position themselves so there will be a level of interest very quickly from that first engagement from you. Should we start on the middle?
Sure.
Or no, on the other end? Let's go for the other end.
We have obviously the company, and we have multiple ways to engage with BMW. And like from like this concept called the Startup Garage, which is a place and a facility which is a co-location thing where projects together with BMW engineers and startups can happen. This is one thing, and of course the network itself to BMW is working pretty well, I guess.
Is the contact of people in that Startup Garage fairly easy for entrepreneurs to get? Okay.
Yeah, and they have selection processes and things like that. And the other thing is, of course, to engage with us as a venture unit to talk about funding, but as well talk about how to engage with BMW. And we, make the networking, even though we don't invest. But when we invest and when it's a portfolio company of ours, then we are, of course, interested in building and growing their business because we are kind of like incentivized by the success of the company. And when we help them with our network to BMW, which the insights of BMW and hopefully can influence BMW in a way as well that they become a future customer, or all sorts of different working models are possible.
All right. Roy?
So when we're looking at Google, we're looking at so many teams and so much, so many directions you can go as a startup, from Google Capital through GV, through the different corp dev acquisitions and M&As. So there's so many issues running at Google. What we're able to do in the last few years is we have people on the ground in 26 countries around the world running kind of regular cadence of startup activities. And at the same time, we've just expanded this year, hopefully by the end of the year, to be in 40 countries around the world. Wow. The biggest value you can get from that, and it's something we believe in, is coming in, taking the value, getting the mentorship, and also going through a process. I know it's very difficult to navigate at Google, and people are not always aware of all the opportunities that we have, but we strongly believe in the relationship building with startup teams around the world. So if you're engaging with us, working with us, we can see the mileage and your ability to execute, then we'll be responsible for directing you to the right people in the company and making sure that you leverage the right opportunities.
Very good.
Yeah, I agree with most of the comments that have been made already. I would say my view from the VC perspective is, find a champion within the organization. GE is a big place, which is good and bad. It is good just because, in one of the slides that were shown in the previous panel, in the previous presentation, there was a discussion about fit. And so we do preferred, it's not an obligation, but it's always a nice thing to have some sort of fit with some of our businesses. And so there is an extra lens for GE. Having said that, GE is so big, you can almost, build a story around any particular technology. And so if you're interested into, trying to work with GE, and if you can get to the businesses directly, obviously that's always a good thing. If you want to try to go through the venture capital group, you can find me or one of the people in my team, and tell the story. And so when you tell the story, what I would say is, number one, again, make sure that we're a good fit for you guys or BMW or anybody else here. Make sure that there is a good fit. Make sure that you're prepared and that you're very credible and that you know the landscape very well. So that's a first cut. Management team is very important for us as well. Once we see that there is a fit in there. So that's kind of like the short answer. There are a number of layers to go from there, but at a high level, be credible, be prepared, and if you can find a champion that will be able to then help you guide the process or help you navigate the corporation internally.
So for you, it's okay for them to go directly into the business unit. It is not something that you prefer them to engage with, the GE venture through you you don't really serve as any kind of bottleneck for.
So it's an interesting question. The simple answer is no, right? If the company is getting traction already with the business, and the business says, we love these guys. Why don't you help them grow? Why don't you invest capital in them? Then we definitely listen to them.
Okay.
And so, most of the time we send companies to the businesses.
Yeah.
But every now and then we do get deal flow and companies from the businesses, either from their BD team, M&A team,
All right.
from their commercial side, from the technical side.
All right. Sounds good.
I'll just add to. One of the key elements for us is fit, because one of the signals we look for is what our businesses are going to say and do with something like this. So, and there are certain vectors to that fit, right? Obviously, in being in the focus areas that are important and strategic to the relevant mothership is important, but it's also a stage thing.
I call it mothership too. That's great.
But it's also a stage thing. And, I do not think personally, unless I'm sure there are different models, but somebody like us and our model, we are not built for seed stage interactions. So we are very early because we take it to our businesses and they do not know what to do with that. So that's probably not the right time to interact with somebody like us, but there are different models, as I said, on this panel itself. So that's one thing. And the second thing, in terms of best practices, you asked, Claudia, what I've found is usually if there is an interaction and relationship building a lot ahead of the actual fundraising, it's preferable. It just gives everyone a good amount of time to get to know each other, for us to take you to the right places, because things are a little bit slow sometimes. And so the more time one has to build that relationship and get that feedback, it's helpful for everyone involved. So I think those sort of things are also quite helpful.
No, I think that is a very, very common. The best time to build a relationship with corporation is not when you're looking for a transaction, right? Yeah. When we don't move that fast, we're not going to cut the check in a matter of, when you need it. So basically finding that strategic alignment is the most important part to really start that conversation. Now, some of the worst practice, I will say, that I have seen of entrepreneur is really not doing that homework and basically approaching the opportunity where they can be connected to a corporate venture leader, and all they can talk about is how great they are, how great their company is, how great the product is. They have absolutely no knowledge of how that is in any way aligned to the corporation that they're talking to. I mean, it's almost like, good for you, bye, right? That is just type of, I find surprising enough, many of the passionate entrepreneur doesn't really go out of their way to identify how they can really align with things. I mean, the beautiful thing about large corporations, we're public companies. Everything we do is public. It's not like, you can't figure out where we sell, how we sell it, what kind of product portfolio we have. Have you guys seen anything else beyond that you will say, hey, don't do that to this audience? I used to hate CEOs that come to me and use this, business development by embarrassment thing. It's like, oh, that competitor of you, they've been knocking on our door all day long. It's like, go with them, please. They're just a type of behavior, I think, that differentiate entrepreneur when it comes to the way corporation want or may not want to engage them. Do you guys have any advice in that sense?
So a couple of things in my view, right, is make sure that you're telling the story and tell it well. And at the beginning, it has to be very simple for people like us, right? Because nobody knows as much about your business as you do. And so as you're telling the story to people like me, right, make sure that you tell it so that they understand and they see the value of what you're doing. How differentiated is it? Where are you adding value in your value chain, right? That's one. And then, again, two is being credible, being prepared, detail-oriented. This is something that people do well is you actually can smell BS a mile away, right? And so as you prepare, make sure that if you don't have an answer, just say, we're still thinking through that. That's something that we still need to figure out. We are Series A, Series B, we'll figure it out together. So definitely, don't answer questions if you don't have a good answer for them. And then the third is don't tell the VC, what they need to do next, right? Or don't come and say, and at the end of the slide say, and we're selling 10% of the company for only $5 million. And so every now and then you do see people suggesting valuations and the terms and so on, which I don't think you're going to find that welcoming in most VCs.
All right, so unless anybody have any quick one, please.
I just have one thing to add, and for the entrepreneurs in the audience, I think it's a very important message. The reason we're all in this business is because we've realized that innovation is going to be quicker, smarter with innovators out there.
That's for sure.
So the wrong message to take from this is how to adapt to working with people like us. Focus on what you do, and do it well. Then we'll come knocking on your door, chasing you to come to work with us. If you build your business or you go to market by counting on one of us investing or bringing you over, you failed already. But if you get to a point that you do something right, that you get traction, that you get users, we're going to be running after you. And I think that's the approach you should take. Build what you build and build it well. That's your focus, that's your core competency.
One last comment. That's a great point, right?
We may want you, but we're going to pay bottom dollar for it, so you don't want that.
No, that's a great point, right? And so here, we want to make sure that we have access to technology that is developed elsewhere, right? There are great ideas being developed everywhere. Mm-hmm. We like to have access to them. And so as you think about putting together your venture, think about what is the A team that you want on your side, right? So what is the A team for investors? And I would argue that there is at least one or two corporates that will add value to your innovation, even if you get the top institutional VC it will be of great value to have a Google on your side, a BMW, a Citi, a GE on your side. And so just think big, right? This is my A team. These guys are going to help me make my company. Make sure that you identify them and go after them, right?
All right.
So, thank you.
That is a fantastic point to end this on, and I hope many of you are staying for lunch, which is your next thing. And thank you very much for being here, and thank Anna and others.
Thank you, Claudia. Thank you, the whole panel.